The number one risk to the high yield asset class is credit default. So as a manager within the high yield universe, you're always trying to protect investors from default risk. We had elevated default risk over the past year with commodity prices going through a historic correction where oil went from $100 to $50 and even below for a period of time. We believe that a lot of the default experience from that episode is behind us as commodity prices have stabilized, albeit at lower levels than history. And that's because companies that were highly levered and could not survive that environment have already defaulted. And companies that were formerly in the investment grade universe have been downgraded into high yield, but they typically are larger in size and have more financial flexibility to deal with the current commodity environment. When we look forward, we expect default rates to decline. We're in a reasonable economic backdrop where the economy is growing, albeit not that quickly, but it's supportive of companies' capability to service their debt and maintain a low default rate. In fact, if you exclude the episode of commodity-related default rates really since 2010 have been below their long-term averages, and we would expect that going forward. There is one area within the high yield market where we would expect to see default pressure going forward, and that's in the retail environment. This is an environment or an industry that's struggling with the change in consumer habits as they're moving more and more towards online purchases of goods and services. This is putting pressure on the traditional brick and mortar retail model. If you think about companies that are highly levered, they may not be capable of adjusting to the new consumer behavior. The good news about the retail sector is that it's relatively small within the high yield universe, less than 5% of the market. The geopolitical environment that we find ourselves in is full of risk. If you look back to last year, you had a Brexit vote, you had an unexpected presidential result in the US with Trump being elected. At the end of the day, we're likely to continue to face uncertainty as it pertains to geopolitical events. The reality is that from the macro perspective, the high yield market, the companies that participate in the high yield market are most sensitive to the domestic economy. So therefore, the global geopolitical risk are more noise and can create risk-off environments or changes in risk sentiment that could change valuations. But the reality is that what's most important to high yield companies is domestic policy because this is where most of their earnings are generated.